So it's a busy week for sterling with an interesting start yesterday. This Brexit negotiations reaching a new phase as we apparently have an agreement on the transition period, and that agreement would last until the end of 2020, giving businesses at least some visibility out for 2.5+ years. There were still some uncertainties around this with the Northern Ireland border issue, etc., but this is a very positive step for Brexit and for sterling. Unfortunately, it does only give us this sort of near-term roadmap and near-term visibility, especially for businesses looking to make investment decisions and clarity. But further out the curve, they still have the uncertainty of what Brexit looks like as of January 1st, 2021. So the reaction has been a bit 3 steps forward, 1.5 steps back for sterling, but I think it's a positive sign, and we're generally have a constructive view on sterling from here. I think the purest way to express that would be via euro sterling, as we have, of course, a lot of dollar volatility potential this week with the FOMC meeting up on Wednesday. Now, we had we also have some other UK data, as well as the Bank of England on Thursday, and then the EU summit at the end of the week to round off whether this negotiations for the transition period are fully in place. We need to see the Bank of England coming out relatively hawkish. We had the last time around suggestion that they saw the need to do more hikes at a faster pace than previously anticipated. And yet, euro sterling, for example, got bogged down in the range. So if now we have this positive Brexit news, as long as the data doesn't see, the rest of the week doesn't see any negative surprises. We saw a small negative surprise on the CPI data today. We've got earnings and retail sales data, perhaps the earnings a bit more important coming up tomorrow. As long as we don't get big negative surprises there, and the Bank of England is relatively constructive and hawkish again, you've got all of the ingredients, I would say, for a sterling rally. So if sterling can't rally, it's really difficult to discover or to understand what would make sterling rally. So we're constructive. If we get through the other side of these event risks and see that euro sterling pushing down towards the lows of the cycle, 87.50 down to 87. There's a nominal low slightly below that figure, and a break setting up a potential big move lower. There's lots of range to work with down below that level. It's been a very tight range for a very long time. This could be one of these sort of big big discovery moments if it is able to work down there. Now, cable a little bit difficult again, given the FOMC meeting, the risks of FOMC hawkishness. Of course, it's a no-brainer that cable potentially rallies quite strongly if we get a dovish surprise and the dollar is weaker. But given both currencies having significant event risks, sort of the more pure way is, again, through euro sterling. Other sterling trades, one interesting one could be sterling Swiss if there is a further return of risk appetite. It would not been the case this week. We have risk appetite very much in a nervous state at the moment. But if we get this sense that Brexit is moving forward, it sort of helps the EU existential risk trade at the margin. We've seen a pretty decent rally in Euro Swiss, and sterling Swiss has really been rallying strongly and is getting up to some interesting levels if you look at a chart there for a potential breakout as well. So lots at stake here this week for sterling. If sterling can't rally this week, it's really hard to understand what can make the currency rally, for at least in the medium term.